So the hot topic recently is that gold is about to crash because gold has went up way too fast. And that's the headline for most analysis. And people are believing it because gold is going up very fast in the past year, right? People are thinking because it went up too fast in the past year, it is bound to come down eventually. And because these analyses are showing a bunch of charts from the past showing that it went up and it's gonna crash and it's a bubble, people are in panic, in fear. And that way of thinking is really shallow because you don't actually understand like why it happens. So recently I went and learned and find out the real reason why it happens itself, why gold would crash or why gold would not crash. And it's because of confidence. Confidence in the policy, in the currency, or the discipline, which I'll explain later, of course. So what I'm trying to say here is that gold actually crashes if people has regained confidence in fiat currencies. And this has been proven in the past over and over again in the past 100 years. Which now brings me to my first point, which is the proper context to why gold has risen so much. So in the past year, the growth of gold is roughly around 64%. In comparison to the S&P 500, which is only 16%. This is huge. This is not just a little bit. Gold is completely outperforming equities. And this is unusual because gold is not supposed to do this because it is not seen as a main growth asset. Well, S&P 500 is, because in normal context, an investment like S&P 500, 16% is actually more than most investments in the world in normal years. But gold has significantly surpassed that, going past the 50% threshold to 64%, which is why people are scared, right? Because the common assumption is that anything that rises too fast or too much is bound to fall, like a bubble. Anything is about to happen and something will happen. But that's the thing. Gold only rises when money fails to do its job. So in order to understand it, we have to know why gold falls instead of why gold rises. Because gold is not just some tech company that would go up or down due to hype or new growth in income, right? It is not a tech company that has possible innovations made to it. It is a gold like fixed asset. So you have to understand why it falls instead of why it rises. And now to my second point, which is explaining why the 1980s gold crash happened. So back in the 1980s, gold crashed massively. And in order to understand why, we have to go slightly before 1980s, which is around the end of 1970s. There was a huge surge in inflation. Oil stock was disturbing the economy, and there was huge geopolitical problems. And what happened was gold peaked at the time around $850. $850, yeah, per troy ounce. And after that, in the 1980s, it dropped about 65%. So gold actually crashed 65%, not because it was too expensive and it cost up to $850. It crashed because the confidence in fiat currency was restored by the Federal Reserve. Under the Federal Reserve's guidance back in the day, they increased interest rates to about in the range of 10 to 20%. Yes, that's very ridiculously high. And that range is just above inflation rates. So what this do is that actually in a long time, the Federal Reserve actually make saving money and holding treasuries able to give the people the return they need to overcome inflation. So people start doing that, and that's why people are. That's why the confidence is restored in the U.S. dollars, and which is why people take their money out of gold and put it into put their trust in the U.S. dollars. Simply said, and the policies came with a lot of consequences, of course. Deep recession, soaring unemployment, collapsing asset prices, and massive problems in financial assets. But it also proves that back in the day, the Federal Reserve was able to tolerate the pain that it brings to the economy in order to restore the balance in the economy and lower down inflation and make sure that the confidence in the US dollars was restored. And that was the reason why gold crashed in the 1980s, not because of it being too expensive. And on to my third point, which is the 2011 peak of gold. So what I want to talk about is the second example, which happened in 2011 when gold's price went up to about $1,920 per ounce. So this event follows after the global financial crisis, and gold surged a lot due to the fact that people are afraid of the Federal Reserve's constant quantitative easing and the government printing money. But inflation never surged like the market expected. Globalization, weak wage growth, and excess productive capacity kept price under control. Basically, what this means is that back in the day, people was in a shock, like a panic, because of the global crisis, that they owed buy gold, but yet prices was kept under control by the Federal Reserve. So what this means is that instead of a sharp decline in gold had this steady decline, which basically they went down by about 45% by 2015. So once again, gold went down because the need of gold and the confidence that they lost in the fiat currency was no longer there. Basically, gold was no longer necessary, so the people was no longer needing it, since interest rates was also above inflation at the time. So what I'm trying to say here is that basically gold declines when real yields rises and the dollar strengthens and the confidence in policymakers are also strengthened. So basically, simply said again, gold will go down when the world economy is stable, really stable in general. Something like that. Now with that said, that leads me to my fourth point, which is why today's environment is fundamentally different compared to the 1980s and also in 2011. So the Fed fund rate of today is around 3.75%, and real inflation measured the way it was in the past is likely around 6 to 8%. So it means real interest rates are still negative, meaning the buying power of people are still erode, and it is still below the interest that was offered, if you know what I mean. So basically, high interest rate, people would put more money in the dollar so that they would get more returns because of the high interest. But now inflation is actually higher than the rate of interest rate. That's what I'm trying to say. But the biggest difference of today and back in the past is that debt is the debt of America. Back in the day, debt to GDP is roughly around 30%, but now it's 120%, and the US is at around $38 trillion in debt and still counting. So if they want to increase the interest rates to about 10, 20, 30%, okay, not 30%, 10, 15, 20%, that would be too much interest for them to pay back, which is practically impossible. That's what I'm trying to say, which makes, and also adding the every year fiscal deficit of about $1.8 trillion annually, and the loose fiscal policies that undermines the long-term confidence in the dollar. All of this adds up to a completely different scenario from the past. well said or easily put is that the US is no longer what they used to be. And at the same time, central banks are buying gold at record levels. Diversifying away from US dollars, this creates a structural demand that simply did not exist back in the past. Meanwhile, the de-dollarization is happening and the dollar is losing its power and confidence of the people. And now finally to my fifth point, which is the realistic risk, right? So everyone wants to know what will happen to gold. Well, I just gotta say, this is purely educational and what I guess and what I've learned. So it's just educational purposes. You don't have to take my words into account, but here's what I think. Of course, gold can fall, but it is mostly counted more as a correction, not really a crash, because crash has to be over a certain amount. What I think is it can go down 10-15%, but it's more like a correction, you know. It goes up and then it will go down and it will go up again. But in a big chart, it's just gonna look like a small little twitch, basically. Because in order for a crash to happen, a few things has to be done, such as real positive yields and fiscal discipline, strengthening dollar, and central banks selling gold, political willingness to tolerate the suffering of the economy for a long period of time in order for the dollar to recover, which just simply do not exist today, which is why I believe gold is less likely to have a crash. At its core, we're more of discussing about fiat currencies. And in the past, in the history of fiat currencies, gold has always outlasted fiat currencies, and fiat currencies always started to fade. So one thing is similar in 1980 and 2011 and today is that the US was and still is the strongest country in the world and holds the most economic activity in the world, and which is why the US dollar is the strongest one. So you get what I mean. As time goes by, every fiat currency tends to prove that it cannot outlast gold, which gold has proven that it can outlast every single fiat currency that came to existence, because fiat currencies are backed by nothing but trust, and that trust can be lost. So if you take what I say into consideration, which is just purely educational, I don't want to take any burden of you doing any buy or sell, but this is what I think. So in conclusion, gold crashed not because, yes, the prices went up too high, but because this fiat money was able to gain confidence back in its policies, in its real returns, and its discipline in managing the policies to make sure that the economy is stable, right? And if you compare what happened in the past and today, the difference is structural, not emotional. And gold may not rise in a straight line, but if you let the fear factor kind of disturb you from understanding what actually causes the crash of gold, then that would be difficult for you. And the real difference, and that would differentiate the real difference between understanding the surface level of just the chart going up and down in the past, or what happened in the past and in the present, comparing to what you could know if you find out, which is the real insights. And with that, that's all for me today. I hope you enjoyed this video. I mean, this is purely educational. I mean, I also just learned this myself. I wouldn't say just learn it, but this is what I've discovered from my own research. And I just finished my finals exam for high school, so I guess I just graduated as well. That's why I stopped making videos for a bit. I hope you enjoyed this video. I hope you subscribe, like it if you enjoy it. Don't if you didn't. And I hope to see you in the next one. Bye.